TV18 exclusive. Timsi Jaipuria caught up with the high-power team of Central Board of Indirect Taxes and Customs, including S. Ramesh, the outgoing CBIC chairman, Mahindra Singh, the outgoing GST member, and P.K. Dash, the incoming CBIC chairman. Timsi began by asking Mr. S. Ramesh about the future of GST collections. Take a look.
I am very sanguine that the GST collections will pick up in the days to come, months to come, as the Honourable Finance Minister has clearly told that this has been a very, very stiff target of almost 50% of the collections from the previous years, which has been fixed as a target. And we have done admirably well as far as the target is concerned, considering the fact that it was 50%. But at the same time, as you said, there could be some shortfall. Every effort is being made to bridge the shortfall, both in terms of compliance improvement, in terms of taxpayer facilitation, and also the CBIC is also trying to use the nudge theory to ensure that taxpayers who are on the fence-sitters come into the mainstream and join the formal economy and start paying the taxes.
When we talk of rate rationalization and the concerns that Congress has cited when it comes to the 31st GST Council meeting, Congress-led finance ministers did say that this is a constant exercise of rate rationalization and government should come up with an analysis before going forward with any future rate rationalization. Not much scope is left, but yes, how do you ally those concerns, especially when it comes to rate rationalization, constant dealing of the deadlines of GST filing? How do you see that?
You know, rate rationalization is a very important issue in the GST. GST, we must all understand that is in the process of settling down. It has settled down more or less, but even then, you know, we have been doing rate rationalization right from the beginning, where so many items were in the category of 28%. But now, most of the items have gone from 28% to 18% or 12%. Some of the items which really cannot move out of the 28%, they are there. Rationalization, the concerns raised by various governments, state governments, are genuine concern, and we are seized of those matters. And Honourable Finance Minister, Union Finance Minister is also seized of the affairs. But we are in the process of rationalizing the rates, and very soon we'll come out with the final rate structure of the GST. As Honourable Finance Minister has recently said that ultimately 18% and 12% will merge at somewhere in between. So the process is on, and we are at the final stages of the rate rationalization.
How soon can we see a merger of the 12% and 18% bracket?
You know, it all depends upon various state governments, various feedbacks, which we get from the field formations. And but as I said, we are in the final stages of doing this. It might take some time, but it will come very soon.
So.
Okay, so that's the view coming in from the CBIC. Now, let's move ahead. The much-anticipated future retail Amazon deal seems to have hit a roadblock owing to recent changes in the FDI policy on e-commerce. We're learning from sources that the deal is all set to be reworked. We have Priya Sheth joining in with the latest in the spot boiler. Priya, so now this policy seems to have thrown a spanner in the works?
Well, absolutely. The future retail Amazon deal seems to have hit a roadblock owing to the recent changes in the FDI policy on e-commerce. Now, the recent changes in the FDI policy on e-commerce state that an entity having any sort of equity investment by an e-commerce marketplace cannot sell products on the platform that is run by this e-commerce marketplace, which means that Amazon will not be able to sell goods by future retail on its website if the deal goes through. So therefore, in this current form, we do understand from our sources that the deal cannot go through in its present form. In fact, the deal is being reworked, is what we do pick up, in fact, in line with the recent changes in the FDI policy. But at this point in time, the companies are seeking clarity on the same. Amazon is said to have been making representations to the government to seek clarity on the kind of investment structure, also the applicability of new norms on the investments made through investment arms. Also, they're looking at legal options within which they could perhaps make a sort of a deal within this investment structure. But of course, as far as the overall potential deal structure is concerned, we expect that to have some more clarity in the second week of January. But interesting to note that Amazon has been in talks with Future Retail to buy over 9.5% stake and with an option to hike stake at a later date. In fact, we did reach out to the companies. Future Retail did not respond to our query, while Amazon said that we do not comment as far as speculation is concerned.
All right, Priya, thank you for that update. So let's see how this big deal indeed plays out. In fact, let's hear out what Kishore Bayani, CEO of the Future Group, had to tell us just a couple of days back when we did speak with him about the changes in the FDI policy for e-commerce companies.
Being in the market and being one of the leading players, we constantly are in discussion with every other player in terms of what can we do together. So I think within the contours of any policy, it continues, the discussion continues. So I don't know about a particular transaction or a particular thing which I can comment upon, but I believe the policy was already existing B2B. So there is nothing which has changed for us. Any transaction which we do will be at a group level in terms of what synergies we can build, because we have a supply chain business, we have a FMCG business, we have a fashion business. So we bring in the strength of the entire country's distribution, and we operate in more than 355 cities and towns. So what we bring in our strength has to be complemented with other people's strength, which can create something better.